Hey guys, welcome back to the channel. In this video, I'll be going over how much distribution income I made from high yield ETFs, as well as go over each position's portfolio metrics. As always, don't forget to smash that like button if you like this type of content so the algorithm gods know that I'm here. Hit subscribe if you're new so you're alerted every time I publish a new video about stocks, investing, finance, and news. But before I get started, you know I have to hit you with a quick disclaimer to appease those YouTube gods. This video is for entertainment purposes only, not financial advice. You should always consult a professional. With that out of the way, guys, let's get into the video. All right, so first we're going to go over to the portfolio. We're going to just take a quick look at it. As you guys can see, we are up. All right, we are back to this portfolio's all-time high of $352,000. Currently, I'm sitting on $42,000 worth of buying power. And I just want to make it known that I still do have a sizable position to SGov, which is a 0 to 3 month treasury. That is currently holding, I believe, about $30,000. So in case I want to withdraw some money for additional buying power, I can do so. If we see for the week, I am up actually $31,000 or close to 10%. All right, this week was really, really good. We had a lot of rebound for some of my positions. More specifically was Robinhood, you know, HOOW from Roundhill. So I'm going to be going over each of the distribution ETFs or each of the high yield ETFs a little more in depth in just a moment. But for this video, we're going to cover PLTW, NVDW, HOOW. We're going to skip WPay. This is just a starter position. I just want to see how it looks. I do plan to probably dump in when the margin maintenance ratio comes down a bit. We'll also be going over XPAY XDTE, and of course MSTW, right? So this whole week, you know, I had a pretty decent payout from all of these positions. So let's get into it. But before I do, just want to make this known that I did increase my allocation to MSTW, all right, the Roundhill MicroStrategy weekly pay ETF. I ended up buying about another 144 shares of this ETF, so about $5,000. So that brought up my, my total position to 1,221 shares. All right. I made a post on social, Blossom Social and X.com, as well as YouTube made a quick post, just basically explaining why I bought more, right? Why did, because this one has been beaten down. A lot of people are jumping ship. A lot of people are getting out of, things like MISTI or MSTW or MST or MSII. They're all saying that, the ETFs basically suck. Everything's going down. But my thesis for MicroStrategy, which this ETF is kind of tied at the hip to, is still very strong. I'm still very bullish on MSTR. And the reason is because I made a post about 2 months ago and basically talking about why I'm including a Bitcoin strategy in the entire portfolio, right? And basically, I believe that because the OBBB passed, it's going to add $2.5 trillion to $3 trillion to, basically the market, to the economy. The M2 money supply is going to rise. We're going to see economic expansion taking place. We do still plan to get lower interest rates in 2025, 2026, and again in 2027 per the Fed Reserve. These are all huge tailwinds for Bitcoin as well as MSTR, because MSTR is a play on Bitcoin. Now, I know there's a divergence between the two, MicroStrategy and Bitcoin. I know there's this divergence happening between them, but I still believe that MSTR will catch up to Bitcoin. It may not be this month, this week, or tomorrow, but I believe long term it will. So I want to be able to pick up shares right now as they're cheap. Okay, we didn't get the S&P 500 inclusion for MicroStrategy, which is kind of a bummer, but again, I wasn't betting on that. I was betting on further institutional adoption of Bitcoin and therefore benefiting MSTR or MicroStrategy. Okay, and again, MSTW or MISTI, they're or MST or IMST or MSII, these are all tied at the hip more or less to MicroStrategy. So if MicroStrategy is not performing well, all of these ETFs are not going to perform well, right? But the best thing about it, in my opinion, is that you'll still be able to collect some type of distribution income while the ETF is down, while you wait for the thesis for MicroStrategy to play out. So, again, a lot of people look at just the charts and they say things like, hey, this is down, it's down this much, it doesn't seem like a good ETF. It is just my opinion that, people don't fully understand the ETF, one, how the ETF actually works, or how it's supposed to be, how it's supposed to, whether it's a cover call ETF or, a 1.2x leverage, position with swap agreements, or maybe it's a half cover call, half leverage fund. I just don't think people understand how those instruments actually work or function. And then by extension of that, people don't fully understand MicroStrategy and the reason why it's down or why it's performing poorly or, whatever, right? But yeah, that is just my thesis. I did make, again, another huge purchase into MSTW, and I wanted to cover that because that got a lot of attention from people. So anyways, that is my thesis. So moving on to the actual positions. All right, so first up is the Roundhill ETF Trust, the Roundhill S&P 500 0DTE cover call ETF. All right, we're going to be using Snowball Analytics for all of these positions going forward because, I usually do I'll use Robinhood to show you guys all this, but everyone usually has a ton of questions about the individual funds. So I think Snowball Analytics will pretty much answer all of that for you guys. All right. So again, the S&P 500 0DTE cover call strategy, it's a vanilla cover call strategy, nothing fun or exciting or super sexy about this. The only difference is between a traditional cover call fund is that they're using 0DTE, all right, instead of, anything else. So here you guys can see, all right, a lot of people constantly ask me, or say that this fund has suffered massive amounts of NAV erosion. Now, there is, an argument to say that, yes, it has had NAV erosion and they wouldn't be wrong. But again, you guys tell me. To me, it looks like it has been recovering very well, even though, yes, it is still down from its all-time highs, but it is slowly recovering, right? It is still slowly recovering. And now for me, I haven't made very many purchases into this ETF. You guys can see I had one big one here. That was about a couple of weeks ago, 113 shares. I think I dumped like $5,000 into this one. And again, I did the same thing, or maybe not, 17 shares there. But you guys can see I haven't really put a whole lot of money into this other than the two starting amounts way back in February. Where I brought this total to, I think, about $65,000, right? So these other purchases down here, I believe they were like small in value. Yeah, looks like 120 shares there, probably like 17 there. But yeah, again, nothing too crazy there. All right, so if we look at the actual total returns here, because this is the metric that I believe a lot of people care about, for total profit, total return, I'm up about $4,000. All right. Now my capital gain, the actual cost of the shares per share, I am down 7%. So I'm down $5,349. But I have received so far since February, $9,810 for this ETF. So in total return, this ETF is in the green, but from a share price, a price chart perspective, this is still in the red. So again, I plan to keep this. This is one of my core holdings. I was thinking about selling out of XDTE and moving the money into WPay. That is still on the table. I haven't quite come to a conclusion if I do want to do that or not. It is something that is, still at the top of mind. All right, but for this ETF, I got paid $339 September 12th. So really good week. Again, this has been pretty stable, all things considered. $339 there, $344 the week before, $342 a week before, $410, $374. So again, this pays every single week. It has been relatively, I won't say stable, but I will say it's been consistent with the amount of return that I've been getting. All right. So hope that answers a lot of people's questions about this particular fund. So let's move on to the next one. So this one is XPAY. All right. This is a target 20 managed distribution cover call ETF for the S&P 500. I know that's a mouthful. Basically what Roundhill is trying to do is target 20% when annualized for a return on your money. So in my opinion, this is not a bad deal. I would definitely take this deal any day of the week, at least getting, I don't want to use the word guaranteed, but somewhat of a promise, I suppose, with a bunch of asterisks and disclaimers that you can get a 20% return from XPAY. All right. So looking down below, we can see that it has kept up very well with the S&P 500. Again, you guys can see here that I bought 92 shares or about $5,000 not too long ago, about a couple of weeks. I do XPAY and XDTE. Whenever I add to them, I add to them at the same time because, again, these make up my anchor or my core position in this high yield portfolio. So I want to make sure that I keep them, kind of in the same amounts, because they're both S&P 500 cover call ETF. They're just utilizing different strategies. XPAY uses more of out of the money, longer, whatever cover calls, whereas XDTE does 0DTE cover calls. So they're using like intraday trades. So I hope that makes sense. So anyways, you guys can see, you tell me if this NAV erosion, not NAV erosion. Again, this usually comes up in the questions. All right, so we scroll down, same exact deal. Now, XPAY is a monthly payer. It doesn't pay every single week like XDTE does. But for total return or total profit, I am up 9.9% or $7,397. But I am still down $797. This just had a distribution this week, which is why this went down. But I was actually in the green for once since February on this ETF. So it was really, really nice. So anyways, it has paid out $8,195. All right. Now, this paid this week $1,284.95. As you guys can see, the distribution amounts have been relatively the same. Of course, there's this little jump here and this jump here. That's because I added to the position. But again, it's targeting, a 20% when annualized. Typically, it's about 95 cents a share. You guys can look up XPAY, the website, and you'll see that the distributions have been pretty steady. All right, so let me actually go back down, show you guys this. Yeah, so anyways, in case you guys are asking about XPAY, how's it doing? Is there NAV erosion, et cetera, here are the actual metrics. All right, so moving on, we have the Palantir Weekly Pay ETF. Again, this one is one of those where a lot of people will say there's NAV erosion, et cetera, and they want to see the metrics for this one. So here it is. This is the Roundhill Palantir Weekly Pay ETF. I've had this one for quite a while. As you guys can see, it is absolutely outperforming the S&P 500 by a wide margin. Okay, so I mean, Palantir by itself is outperforming the S&P 500. So this is actually doing just about the same, if not a little better than Palantir itself. All right, so let's look at the metrics here. So for total returns, I'm up $21,150 or 22, almost 23%. All right, capital gain of 19.7%. So there is no NAV erosion on this. All right, so dividends received, I've received so far $13,575 for the year, or as long as I've been investing into PLTW. All right, so this ETF actually makes up about 7 to 8% of my total portfolio. Again, I like to try to keep the positions a little smaller, or at least try to keep them within that range. I don't like to go over, but yeah, so this is the Palantir Weekly Pay ETF. And this one paid me this week $602. All right, so not too bad. All right, September 9th, this paid me $602.65. The week before, because Palantir was getting absolutely slaughtered, this one only paid me $396. So again, you guys could see that the distributions changed. 1 week, it paid me $1,600, and that's when Palantir was ripping, I believe back in August. So yeah, August 19th, duh. But yeah, it was crazy. I've never had a distribution amount that much from PLTW. So absolutely insane. But again, people are always asking, what are the metrics? How much are you actually making? Is there NAV erosion, et cetera? So here is the metrics for you guys to look and come to your own conclusions on. All right, so we also have the Roundhill Nvidia Weekly Pay ETF. All right, this one is for obviously Nvidia. We can see down here, this one is absolutely brutalizing the S&P 500. Of course, Nvidia by itself is also doing that. So we'll go down to the metrics because this is what everyone really cares about. So for total return, I am up $14,883. Now for capital gain, I am up $6,381. Now dividends received, I received $8,502 for the year, or since I've been investing into this ETF. Now, this one paid me $384 for this week. As you guys can see, the distribution payments have been pretty, I want to say close. Like they haven't really been too crazy as far as, like an insane dump or payout like PLTW. And I find that is probably true with a lot of the large cap weekly pay ETFs, you know, the Mag 7, you know, the Googles, the Amazons, the Metas, you know, those larger cap, you know, companies, that their distributions have been hovering around the 30 to 45% for the weekly pay ETFs. Again, that's just what I've seen. You know, they might have a stellar week here or there, like with Google or even Tesla. But, you know, generally speaking, in my opinion, again, just looking at the distribution schedules, you guys can see for yourselves, they've been usually around the 30 to 45% range. And I've been pretty happy with that. I'm more happy with that than, of course, you know, a 5% yield on typical blue chip stocks. Now, again, you guys can see here, distributions, they change week to week. These are not fixed income instruments, so you have to be careful when you invest in these. Of course, you know, these are leveraged positions, all right? So 1.2x leveraged positions on the underlier. So if the underlier like Nvidia was to go up 10%, this would go up 12%. But if it goes down 10%, this would go down 12%. All right, but so far this has been a steady Eddie type of ETF because Nvidia has been pretty steady Eddie since Liberation Day, as you guys can see. All right, so we'll move on to the next one, which is the Robinhood weekly pay ETF from Roundhill. This one had the recent S&P 500 inclusion Robinhood had, and it had an absolute blowout. Like it went up like I think 10 to 12% or something like that. Crazy. All right, so we can see Robinhood just absolutely killing it. Again, you guys can see here they were down. I increased some positions, or I increased some shares here and there, but I haven't really added to it because, again, this reached my threshold for about a 7 to 8%, you know, in the total portfolio. And then we just had this really massive jump when they got added to the S&P. And they also just had their Robinhood event where they displayed a lot of cool features that are coming to Robinhood. So really exciting things happening for Robinhood, definitely into the future. I'm very bullish on Robinhood. I think they can become one of the most premier new fintechs or brokerages in the future. And they're not just going to be a brokerage. They're going to include banking. You'll be able to go to Robinhood for a mortgage, you know, for a rental property or a house. You'll be able to go to them for probably even credit cards, you know, in the future. Who knows? But I think Robinhood just has a lot going for it. They're listening to their community. They're listening to their investors. So I really think that this company has a lot of good tailwinds for them. All right, so let's look at the total return metrics here. All right, total profit. I am up $4,457 just for the share prices because this thing was hit pretty badly in September. I'm only up $829. All right, but I've received $4,000 in dividends since I started investing in this, I believe in late August, early August. I can't remember when I opened the first position, but it was around that time, or maybe it was right before August. All right, so this is that. And for income, I received $425 from HOOW. All right, you guys can see here the payouts. Even though Robinhood has been getting kind of, you know, beaten down over these last couple of weeks, the payouts have been pretty okay-ish. Not the best, but pretty okay-ish. But they also had some really good weeks. You know, like they paid me out $1,100 when Robinhood was really ripping. So, you know, hopefully we'll get back up there again. There has to be a lot of bullish momentum behind these stocks in order for them to pay out these really, really nice distribution yields. All right, finally, this is the ugly child of the group. This is the one that has been beaten down the most. This one is most unloved, which is why I think right now, for me personally, why I increased the position. Because again, you know, when certain stocks are out of favor, it's probably a good time to buy, right? Buy low, sell high. I don't know why people forget that simple mantra, or even the mantra or the platitude, you know, buy when others are fearful, right? So this is why I'm still bullish on MSTR. Nothing is going to change that. The short-term volatility is not going to change my mind, but this is the Roundhill MicroStrategy weekly pay ETF. We can scroll down. S&P 500 is absolutely killing this thing, right? Absolutely killing it for as long as I've been investing in it. MSTR just, you know, by itself is not getting a lot of love. And MSTW, because it's a leveraged position, is down substantially more than MSTR. But that is not deterring me, right? That is not scaring me because, again, I have a long-term thesis. The problem here with, you know, these Roundhill ETFs, it's not a problem. I'll say it's more of a feature than anything. When you know, the underlier goes down, these are going to go down even more. And because of that, because they're going down even more, it's going to be harder for MSTW or any of the weekly pays to recover in value because now they have to make much more right? They have to make much more in order to get to their, previous highs, right? So if MSTR constantly went, kept going down, 5%, 5%, 5%, this ETF is going to go down a little bit more than that. And it's going to need, more in order to recover, right? So this is that volatility decay. This is that, drag on the performance. And it is what it is. But again, I needed something that is tied to the hip of MSTR with uncapped upside because I'm bullish on MSTR by itself. And I didn't want to hold the MSTR common stock and have Misty when MSTW is around. You're basically getting the best of both worlds with MSTW, in my opinion, of course, not financial advice. All right, so let's look at the metrics. These are blood red. Nothing good coming out of this, all right? But for total profit, I am down $4,233. That's for, total return. However, for capital gain, this is just the share price. I am down $6,370. So we can see that, the dividends received is kind of offsetting that, that share price sell-off or the share price decline. So a lot of people, again, will shout out NAV erosion, but this is just normal market stuff. Okay, this is just normal market stuff. In my opinion. Is it NAV erosion? You guys let me know down below in the comment section. All right. So for the payouts, MSTW paid me out $383. Again, we've been getting kind of slaughtered here. Now, this is the only ETF in the Round Hill lineup for weekly pays that does not just do swap agreements. Okay, all the other ones do swap agreements, but MSTW also has, a call option feature built into it that you can read in the prospectus. I covered it in a previous video. They do flex options for this ETF, not cover call. All right, I kept saying cover calls in my last video. That was my mistake. I must have had cover call on the brain, but yes. All right, so. We can see, decent payout when I first had it. This is when MSTW was, doing very well. MSTR was doing very well. And outside of that, payments have been kind of the same. And I did increase, like I just mentioned, my position in MSTW. All right. So that will do it for this. All right. That'll do it for this portfolio. In total for the week, I made $3,446, all right, for a total so far in September of $5,595. Not bad at all. All right. Now, just some quick market news. All right, just a quick reminder for anyone who might not have been keeping up. The CME group has a Fed Watch tool, right? We have the Federal Reserve, the FOMC meeting this week to discuss the interest rates, right? To discuss the federal funds rate. And right now the market is pricing in a 96.4% chance of us getting at least a 25, bips or 25 basis point cut for the interest rate, bringing us down to, 4 to 4.25. Okay. There's a very small chance of, of getting a double, or 50 bip cut. But I think the market, in my opinion, is already kind of pricing all of this in. This is why we're having a huge run up. But I am starting to see the narrative out there that there is a possibility of, a kind of a sell the rumor, sell the news type of event happening, where we're going to have this run up all the way up to the FOMC meeting. And once they announce the rate cuts, we could possibly see, a market sell off. Now, that's not there to scare you. I have nothing to back this up. It's just what I am hearing or what I am seeing out there. There is still this talk of this looming recession, and the data is starting to point there, right? We are starting to see, like the jobs report that came out, the revised numbers was absolutely atrocious. It's 1 million jobs weren't even there. They didn't even exist. So, it's just getting crazier and crazier as more of this economic data continues to come out. I think, personally, I'm just holding the cash like I showed you guys. I will deploy this cash, this buying power here and there. I'll probably start sprinkling it. I did tell myself I was going to hold off for at least, a week or two before I start making any purchases. So I did miss the dip on some of these ETFs, but I'm going to start sprinkling in here and there. I might even open a new position. Honestly, my interest has been in, the, Ethereum play, FU or BMNR. And I've obviously increased my position in MSTW, right? But I might also start adding more money to Bitcoin because I believe that if we have this rate cut, and if we continue to flood the markets or the economy with cheap, easy money, this will be definitely a tailwind for risk on assets like equities and crypto, specifically for crypto, Ethereum, and Bitcoin. So that is just my thesis for all of this. Of course, you guys might have a difference of opinion. I would love to hear it down below in the comment section. All right, so I've been droning on for about 24 minutes. I hope you guys enjoyed this video. Hope you guys got a little bit of value. Outside of that, I hope you enjoyed the rest of your day, the rest of your evening, and I will see you guys in the next video. Take care.